I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He's speaking to us from Colorado. Rick, welcome back to the show.
Thanks for inviting me on, Jim.
I hope your summer's going well.
Going too quickly, I would say.
Then it is going well. The markets always depend on what the U.S. Fed says it's going to do or might do or could do or should do, and they're still making noises about a rate hike in September. Any truth to that?
Well, I've tuned that out, except to say whenever we get the will she or won't she game playing out in the press that there's as much chance of a significant rate hike as there is of a Martian invasion. And the reason is, it's one thing for the Fed to talk the talk about, well, the economy's improving and we think it's going well enough that we can raise rates, and I guess the term is normalize them. But in reality, we know that there's no particular strength in the economy. There's strength in certain financial assets. The stock market has been strong, trading at record highs. Bond markets have been strong as well, but that hasn't exactly translated into good business on Main Street. So, there's this disconnect between the Fed talking about why they can raise rates, and so every few weeks we get a flip-flop. I think the latest flip was that they were going to maybe raise rates in September, and then it became December, and then I think we're back to could happen any time now, but we don't. The strength is not there in the economy to walk the walk here. So the Fed's little dog and pony show can only fool so many people or engage the attention of so many people, and in the meantime, people who trade the market have to pretend that whatever is out there ostensibly is going to happen.
Well, the whole idea, of course, behind these low rates of interest was to encourage businesses to expand, but it seems to me all they've done is buy back their shares at extraordinarily high prices.
Yeah, you have to ask yourself, how's it working in Europe? They've got negative interest rates, and I don't even think that the European Central Bank pushes the falsehood that they are going to somehow stimulate investment by making it prohibitive to just park money. And it's not working, but they're more or less copping to the fact that it's just an outright attempt to stimulate a little consumption. And one of the reasons the U.S. stimulus works better is because Americans are hardwired to shop. Europeans don't have it's not customary there to go out and buy an automobile, no money down, 6 years to pay, simply because the interest rates are low. But the U.S. responds very directly to stimulus, where borrowing costs, consumer borrowing costs, are lower. So, but we've gotten them out as much bang for the buck as we can ourselves. So, there's a question of how long it can go on. I guess we should keep a close eye on the car manufacturers, and the downturn there, I think, will be the mine canary.
Well, the Canadian auto sector, I've heard, is in worse shape than the Canadian oil sector, which has taken a huge punch to the face.
Well, Canada, for better or worse, has a lot of ties to a natural resource economy, and of course, it has Australia has a similar problem, and there's just no getting around the fact that when commodity prices are down, the Canadian economy suffers, the currency suffers, and I think it's going to be a long wait, though, before we see a serious commodity inflation that pumps the Canadian dollar a little bit.
Well, one thing Canada does have on its side is a lot of gold venture exploration and development. And on days when both the U.S. and Canadian equity markets are falling, the little old Toronto Venture Exchange pokes its head up and is improving because people are putting money into junior gold stocks.
Well, for sure, the rally in gold bullion, gold and silver, precious metals, has come quite a ways, and I see a lot of these little mining stocks have not merely doubled or tripled. Some of them have increased by tenfold or more. So it looks like the real thing, and of course the whole. We've had this nice rally in gold and silver since January. And you tend to be skeptical because we've seen so many rallies fail, but this one looks to be getting legs.
Also, speaking about how you can stimulate the economy, if you recall the last recession, Germany's solution was to give 10 grand to everybody who bought a brand new German car.
Well, we need more of that. I say we need it, but we need it like a hole in the head. But that's the kind of direct stimulus that has never been tried. In the U.S., the central bank credit easing has been geared mostly toward the big players, the lenders, the big banks, and as I mentioned, there hasn't been too much trickle down. But if we were to have genuine helicopter money where your friendly government representative is out on Main Street just handing out $100 bills or packets of $100 bills, that would be true stimulus. And the truest stimulus of all would be simply, let's say, a tax moratorium for a year. If the U.S. government were to say, okay, there just won't be any income taxes in 2017, that, even as perma-bearish as I am, that would be stimulus. And the oddity, the curious thing is that we've already shot enough into indirect stimulus that if the entire amount were kind of transposed into a tax moratorium, it wouldn't cost, it wouldn't be a bigger hit to revenues. In other words, for all we've squandered in a stimulus that's only pushed financial assets up in price, we could have shot it on a genuine stimulus of 1 year tax moratorium.
Well, Europe, of course, with negative interest rates, banks, insurance companies, pension funds have all taken a pounding because they don't have regular guaranteed income. Why did they do it, and why do they think it's going to work?
I'm not sure they actually think it's going to work anymore. I mean, we had Japan's good example to tell us what types of stimulus do not work. And as I was just saying, I think we're beyond the charade that negative interest rates are somehow going to stimulate capital investment. The opposite is true, and when you put interest rates into a state of great uncertainty, it essentially asphyxiates capital investment. Investment increases when people have what they think is a clear and confident picture of the future. And the lowering of interest rates into negative territory does anything but stimulate confidence. So we're at the point where stimulus is actually having a negative effect. And, in the U.S., supposedly individuals are not even putting it into the market. Their portfolio balance now is more in cash than it's been in recent history. And it has to do with the people's, that horizon of opportunity. When investors look out a long ways and see nothing but sunny skies, they'll tend to invest. But, the more the Fed attempts to loosen below zero, the more it encourages paranoia.
Well, Canada's Bank of Canada Governor Stephen Poloz keeps hinting about negative interest rates, and I can't see that causing the kind of confidence he wants to build.
Yeah, it's really having the reverse effect. The more negative we go, the more frozen with fear, understandable fear, investors are. So, it's, I guess, just a matter of time before this attitude takes its toll on the markets. The only reason we're not in a depressionary wallow globally is that because the broad stock averages are at or near record highs. So, even a man on the streets thinks, well, how bad can things be? What kind of danger can the system be in if the stock market's at record highs? But, of course, we know that that's exactly what we should not be focused on for reasons of, if that's where we take our confidence from, then we're in trouble.
Well, pension funds now are heavily invested in the stock market. Is that a good thing?
Well, pension funds are all kind of, the liability curve puts them in need of 7 to 8% yields forever. And, of course, none of them are making anything like that, so they have to go outside the norm and invest in things that are much riskier than the risk they would have taken just 10 years ago or even 5 years ago. So they're all kind of overextended just to meet their obligations. They're putting their money in things like Bolivian reverse floaters just to coax an extra 15 basis points of yield out of their investment portfolios. So, we've talked about this before, but I think the coming pension bust is going to be in a deflationary sense where things really fall apart.
I think Bolivia will work out for pension funds as well as it worked out for Butch Cassidy and the Sundance Kid.
I just remember when Butch and Sundance stepped off that train in Bolivia. It was kind of a rude awakening, but you can see that at least one country, Venezuela, is reverting to that state.
We'll have more with Rick Ackerman right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Rick Ackerman. Rick, the internet, of course, has changed the way we do business, the way we gather information, and it's also having its way with the retail business. What's happening?
It's a pretty sad story. Some of these companies, Macy's and Nordstrom's, to name two, really know what they're doing. And they're doing everything they can, and it's simply not enough. Macy's just announced last week that they're going to be closing 100 stores. They said that they recognize that a lot of these stores are worth more for the real estate than they are for the sales potential. And in the case of Nordstrom's, what department store that you can remember has ever done so many things so well? The customer service is great. Their policy on returns is great. They really kill themselves to give the customer a good experience, and the merchandise is high quality. You can go into a Nordstrom's, into the men's department and see things that don't look like the remainders in last year's fashions. They're right on top of nice things to wear, and so they're doing everything right, but they're struggling, and I think they know they're struggling not just to turn things around, but to survive. And in the case of the Nordstrom's brothers, they were out there, responding to the analysts, saying, "Well, we're just going to have to do some things better. We're going to have to change, and we're going to have to do this and this and that even better than we're doing already." But I'm afraid they've run out of room for improvement, and the only improvement would come in the cost-cutting way of closing stores.
Well, Nordstrom's just opened up a branch in Vancouver. It is a beautiful store. As you said, great service, great staff, great products, but perhaps the busiest place in it is the bar they have for all the bored men waiting for their wives to finish shopping.
Yeah, Nordstrom's is known for its shopper amenities, and you can probably go there and get a sauna and a massage in a lot of the larger stores. And it's certainly it's a very pleasant shopping environment. But when I go to the one here in Broomfield, Colorado, there are usually more salespeople on the floor than there are customers. So it's kind of it's scary because you don't want to see retail disappear entirely, and I'm afraid that's what's going to happen. Everybody thinks, oh, well, I can get it cheaper online, but in a way, it's kind of what's happening to newspapers. People say, well, I don't really need to subscribe to a newspaper. I get my news online. What they don't realize is that the news they read online is simply cannibalized or stolen from news sources that are dying. So we've got, unfortunately, just a couple of them left, Associated Press for one, and every local paper in America now is just a smidgen of local news, and the rest of it is just stuffed with AP wire stuff. So, when people say that, I can do my shopping online, they don't understand that that's really killing off the wellspring of where where shopping goods come from.
Also, I think a lot of people don't understand how important the trucking industry is. I saw their slogan once. If you're using it, it came in a truck. Everything.
Yeah, they make that point pretty well. We sometimes when we get behind slow traffic and some 18-wheelers, we curse it, but trucks move America, and we feel it when gas prices are up in that $4 a gallon range, and every trucker in America is paying more to get goods from here to there.
And of course, we're getting predictions now with the robot industry taking over the trucks. That will cost in the next 5 to 10 years between 3 and 5 million jobs.
Yeah, it's everywhere you look. We're getting robotized. I didn't quite believe the self-checkout in Safeway. When it first came along, I was thinking, how do they do this? I mean, why can't people just walk out with a bag of groceries and not pay for them? But I can see how it works because I've used those auto checkouts myself 100 times, and they work pretty well. The bad news is that the same automated process can work just as well everywhere you look. And the first place that the robotizers are going to be looking is in the fast food business now, where so many cities are trying to extort employers like McDonald's into $15 an hour wages. So it couldn't be clearer that $15 an hour wages for minimum wage jobs is going to bring on robotics like hellfire.
Well, it's already brought in some robotic McDonald's in Vancouver, where you punch in everything and then you just pick up the order at the end.
Well, you're going to be picking up a spatula before long, I think. I mean, the whole cook it. I think there's a cook-it-yourself movement coming, and we're not going to like it, but everywhere we look, we're getting less and less service. It's all mechanized, and it's simply because when you push the minimum wage up, as is occurring now in so many places, it's going to very much suppress the demand for labor.
Rick, thank you so much for chatting with us.
Well, it's always a pleasure, Jim. Thanks for inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. You're listening to HowStreet.com radio. You can find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.